Stocks rallied in the U.S. even though there's been some weaker jobs data. There has been progress on trade talks with some countries like Vietnam. But amidst all the uncertainty, my next guest prefers sectors with a more stable outlook. Let's go to Neela White, Senior Portfolio Manager, Blue Wing Advisory Group, Raymond James. Thanks for coming in.
Thank you for having me.
So we have payroll data, slowing retail sales, that kind of thing in the U.S., but we're still hitting records in North American markets, record closes. So why do you think we're seeing that upward trend?
I think right now, just because we are now positively having trade talks and the market's feeling more positive about that. We're getting some deals done. It looks like the bill's going to be pushed through, no extension. So I think when the market looks at something like that, they end up thinking, hey, you know what? We've climbed the wall of worry. We might be safe now to put money in the market.
Do you think we're a little ahead of ourselves?
I'd have to say, for me, it's the tale of two cities. This actually worries me, I'd have to be honest. You know, if you have money in the market right now and you didn't sell, I think you're happy because we're reaching all-time highs.
Sure.
I think it's new money that's coming in and having the fear of, I'm missing out on something great. They're not thinking, what could this be looking like in the next quarter when possibly more data starts to roll in with how did tariffs affect the company, passed on to the consumer. So it's a bit of both right now.
Yeah. So if you were pulling or putting money on the table yourself, at this point, would you take profits from what is already gained? Would you put in expecting more of a run-up? How are you advising people? Because you mentioned still we're expecting some of the tariff unwinding in the second half of the year.
I would say it has to still depend on age, stage, short and medium-term goals. Really, if you know that you have some sort of expense coming up and you have a heavily weighted position that has moved positively, I'd say it's always prudent to take profits, whether we're in this type of environment or a different environment. So I think profit taking is always a good strategy. Lightening up on heavy positions, always a good strategy. And for the newer people, if you see a name that you like, that you've been eyeing, that you believe in the long-term theme of it, it would be just taking baby steps in. That way there's a pullback. You can buy a bit more, but if it keeps running, you know, it's sort of thing at some point, there would be a bit of a reversion to the mean, I think.
Yeah, some sort of stumble. Let's talk about stocks that you do like. One of them is Dollarama, which I've heard from a couple of people. Yeah. They like the fact that it's expanding and it doesn't look like it's going to stumble because consumers who want to save money will go there.
And I think that's a growing theme, you know, right now, obviously, based on what we're seeing in the economy, possibly job numbers, salaries aren't going up as much as we think. I think Dollarama provides value for investors and for consumers just right along the spectrum. And I think even once we are through this whole headwind, I'm not sure that this is going to be soon forgotten, what the feeling is of, you know, something being more expensive, whether it's at the grocery store or at a regular store for household items.
Okay, let's talk about another one that you like, which is more, I guess, of a dividend stock pick, Eli Lilly. And I want to say we know pharmaceuticals have been stumbling a little bit. Healthcare stocks in general have been stumbling. Why Eli Lilly is as a pick now?
I still like it based on their pipeline. So when you think about the stories that we've been hearing is about market saturation with the GLP-1s,
yes.
They have so much broader of a portfolio than just that. They have cancer drugs. We know that cancer is still one of the top 10 causes of death globally. They just recently bought a cardiovascular company called Verve that has gene therapy, a one-dose therapy. So when you think something like that can start happening, and that's like the #1 global killer, you end up thinking, wow, these are great technologies. They've been approved for their early Alzheimer's drug. I think it's something like 20 people every minute are diagnosed with Alzheimer's around the world.
And this is a detection drug, right? Not a treatment?
No, amyloid is the detection drug, so that's for intravenous use, and what it does is it helps in brain imaging, the amount of amyloid plaque buildup, which is the diagnosis for Alzheimer's. So they have that. And then on top of that, they have Kisunla, which is the actual drug for early-stage Alzheimer's, and it's been approved in the U.S., China, and Japan.
Okay, so that's one you're keeping an eye on.
Yes.
Tell me about CareTrust REIT then.
Again, senior housing, when we look at it, they own skilled nursing. So their word skilled nursing facility would be our equivalent of nursing homes,
okay.
Senior housing and healthcare properties. So when you think simply, again, of the aging demographic. By 2030, 70% of the boomers are going to be aged to 65. And when you look at the need, how it increases, that's skilled nursing. And they've also just made a purchase in the UK, so that also expands their footprint. And we're experiencing, Canada, US, globally, the UK, there's greater demand than supply. So I think right there, the thesis is supported 2030 and beyond.